Hi everybody, this is AJ Tejwani from Property Sapient. So a lot of my clients keep asking me this question, and my friends too, that do I need to refinance? Should I finance or not? Is it a good time? The rates are low. So what I did, I created a small spreadsheet that I'm going to send you the link along with this video. And all you got to do in this is put in your current loan amount, your current interest rate, your current term, your monthly payment, and let's break it down by principal and interest. And I have put a link here for bankrate.com. You just put in the same information here, and then you click on this button, it'll say show amortization schedule, and you can see how is your total payment broken down between principal and interest. So this is your principal, this is your interest. All right, so this is what you're paying, and we have to focus only on the interest part because you have to pay the principal either way. And when did you start your loan? So you need to know how many years you've been in your loan till now, so you can decide if you're taking, for example, you're already in your loan for 5 years, in this case, close to 5 years, and you're taking another 30 years. Basically, you're adding 5 more years to your loan amount. So do you really want to do that? Or do you want to finish it off in 25 years? Do you want to take some money out, or you want to pay quickly and finish it off in 20 years? Anyway, this will tell you how many years have been left on the loan. Now, say for option 1, you get a 30-year, and they will give you all the good talk about, hey, you should definitely refinance, 30 years, definitely you have to do it, the rates are low. But guess what? If you look at this interest rate difference, it's $645 and $604. So you're saving on interest about $41.66. If you include the lender's fee, and that includes your title, your appraisal, and all the other fees the lenders are charging you, add that number here. You have to add that because that's basically adding it to your entire mortgage value. So if you add these numbers, then the number of months it's taking for you to break even is 56.36 or 4.7 years just to break even. Now, if you really want to get a value out of it, I would double this number. I would say you should be staying in this house for more than 9 years. If you're staying more than 9 years, then it's definitely worth going through this trouble. If you're not planning to stay for another 9 years, then don't. Of course, with a caveat that this entire video is not made from a financial perspective. I'm just a layman sharing what I have done, so please don't take it for every word. You should consult with your CPA and your family to figure out the right solution, but this will give you a good starting point. I shared this with mortgage people who were trying to sell me, and guess what? They came back and told me, you know what? You don't need to refinance. The same person who told me that I should came back and told me that based on these numbers, I don't think so, you should. Anyway, so here is the second option. Now in 20 years, you're reducing your loan period from 30 or 25 years currently to 20 years, for example. You're taking 5 years off, but you're increasing your monthly payment. Are you willing to do that? Even then, the saving and interest is adding about 4.7 years. That means at least you should be planning to stay about 5 more years to really make the value out of this. If you're not, then you should not refinance. Hope this spreadsheet helps you, and I'll talk to you soon.